Ladies and gentlemen, if you asked me 15 years ago, I've been trading 22 years. If you've asked me 15 years ago if the market would just continue going up and down, I would say we would have major up and down moves for the rest of my life. It almost seems delusional not to think about that. If you just look at any stock market graph over history, the market has had major up and down moves. But one thing has always been the case. We always end up back to the highs somehow, magically, when the world is coming to the end because of Corona, or at least the bullshit insinuated fear that the world was coming to an end for Corona. The market started plummeting. The market would get halted to the downside. Literal physical rules that the NYSE and NASDAQ put in place to literally stop the market from trading in order to prevent a plunge protection team policies in place. We're all coming out. I mean, I remember there was a week where every single day the market got halted, like the Qs and the spiders, because of just absolute volatile moves. But we have been told throughout history that history always repeats itself. I don't believe that. I think over a long enough time people like to think that because there's no time frame. It's somebody saying Apple's going to $2,000. That person, as long as Apple exists as a company, will never be wrong. And as long as the market exists, you can never be wrong by saying the S&P will hit 100 million. The question really is when, not if, right? So here comes an interesting scenario. We're printing money. A year ago, I literally said, more than a year, about March of 2020, I said we were going to go through a period of hyperinflation. The Federal Reserve, the top people on top, the top economists, some would argue, in the world, since they're working for the United States of America, were not afraid of it. They said it wouldn't happen, it wouldn't exist. But being from Brooklyn, I just like to see things how it is and cut through all the bullshit. And that's what happened. We started hyperinflating, but are we really hyperinflating? The market, in my opinion, will never be able to stay down ever again. We've reached the point of no return where our federal debt, just in order to pay the debt on the money we owe all these other countries, we owe whatever, 100 countries, 50 countries, whatever it is, trillions and trillions of dollars in debt. Just the interest payments alone, our GDP cannot cover. But if we do keep printing money, we would be able to cover it. What is that going to come at the expense of? And how does that relate to your trading? And how does that relate to the market? We're going to show my 2 cents, somebody who has accurately predicted hyperinflation, our form of hyperinflation. Maybe, the US dollar hasn't gone to the point of Venezuelan dollar or the German dollar after the World War. But I'm going to show you what our hyperinflation looks like, why I feel it's going to continue, and why you'll never be able to hold the U.S. stock market down ever again for the rest of known U.S. history. I am Mark Melnick, and this is the Newsbeat Show. This Newsbeat Show has been brought to you by T3 Live. Thank you for reading our disclaimer. And also, this Newsbeat Show is here thanks to viewers like you. Don't forget, if you want something for free, because we all love free tendies, you could click the link in the video description. I'm going to give you my free ebook, How to Overcome Psychological Toxicity in Your Trading. Very important for your success and very important for your confidence. And if you don't believe confidence is a thing, we are easily, by far, bar none, the most consistently profitable, confident room on Wall Street. I don't even think it's an opinion anymore. It's just a matter of how far we go with this. Take advantage of the free things we offer you, ladies and gentlemen. This can change your life. All right. With that being said, let's go into inflation. Now, there's something to be said about adjusted inflation, meaning, a dollar when your parents were around was worth way more than a dollar today. So I want to take you over to median home prices. And for some reason, Amazon is trying to market me natural children's toothpaste brand from Amazon. Interesting. Um, Wonder how that got there. So, we're going to look at historical data right now. We're going to look at historical data for, um, we're going to look at historical data here for median home prices and inflation adjusted home prices. Because inflation adjusted home price is the fair way to look at something. A home back in January of 1953 was $18,000, but we all know that $18,000 was worth a lot more back then. So that's where the inflation adjusted price comes in. And then I'm going to talk to you about my conversation with some of the biggest realtors in the world who, do some of the big stuff in Manhattan. I'll leave it like that. They're very famous. Okay. Um, So what I'm going to do is, you could look at this medium home price, and if you look at this side of your screen, this middle number where it says 18,000, you'll notice that that number starts climbing rapidly as you go through the years, of course, because the dollar is worth less. However, going back up here, you're not going to see the same thing on the inflation adjusted price. So now I want you to keep your eyes on this column, on the rightmost column here, and what you're going to realize is this already takes into account inflation. We're going to talk about the median home price. And what you'll see is it barely moves. Every single number you see is another month in US history. It barely moves. In fact, it's going down now. So literally, inflation adjusted from 1953 to 1960, the price you can see is actually going down. This, even though, of course, as always, this price on this column, the middle column, will always go up. But here, I want you to watch something. Nobody's talking about this anomaly, but that's why we're here today to discuss it. Look, the price is still going down. It's still going down. It literally stayed practically at the same amount for like 26, 27 years already. It already stayed at the same price, adjusted for inflation. So the prices of homes, despite numerically always going higher, uh, inflation adjusted, the real price never went up. Pretty much the insinuation here is regardless if you're a plumber or an electrician or maybe you're working in a supermarket, you would have needed pretty much just as much time to save up for your home as you would 25 years ago. You see that? That is the insinuation because it's all inflation adjusted. And I'm going to keep going down. You can see it still drops. Even by 1985, and we started at what, 1953 or 51? We started at 1953, and we're literally 32 years later, adjusted for inflation, the price of a home is literally identical. Adjusted for inflation, of course, right? So we're moving on. And then even as we go, to 2000, internet boom, everything, it does go higher from about 175,000, let's call it, roundabout to around a couple hundred grand. But what you'll notice is you never get a really big move in a 1 year period. So if you look at any 1 year period, you don't really get massive, massive moves. But as you go on, and you could see the price then drops, it was as high as 270,000. Then, of course, you remember the crash of '08. If you don't remember it, I'm going to take you back to the spiders, or I could even do S&P for those who like S&P as a measurement. I'm going to take you to a yearly chart, and you could literally see the S&P was in December of 2009, it hit $666.79. Quite diabolic. And literally, from 2009 till now, 12 years later, it's at 4,200. $47.44, literally closed right near the all-time high, right? So I want to show you now where the interesting thing comes for this. And I'm still going to scroll down here and I'm going to just show you that things haven't been happening, but I want you to focus on really what happened since COVID. COVID really happened in the COVID drop happened in February. That's again not an opinion, but I'll just bring it up anyway, just to show you a monthly chart here. Here is February on the S&P 500, where it dropped from 33.93 to 28.55, and then in March it dropped to 21.91. So literally the S&P is trading twice as high 1 year and a couple months later. I mean, literally. Crazy, right? But check this out. This is what I find interesting. What you notice right now is, and this thing only goes to December 2020, and if you talk to any realtor, you'll realize this number is going up exponentially. You'll realize that we're hitting all-time highs on inflation-adjusted home prices. So what you see here is a lot of the smart money noting that these home prices are going to explode. And I'm not sure if you are a realtor or have talked to any realtor recently, but everybody is saying the same exact thing. Every realtor you talk to will tell you that almost every single home is going for above asking price, meaning somebody's asking 300,000 for a home and start selling for 320, 330, 340, 350. They're asking a million, all of a sudden it sells for 1.2, 1.3 million all of a sudden. People are getting above their asking prices due to demand. And where do you think that demand is coming from? Well, when we print the money in which we do, what happens is it's a trickle down effect. People are talking about right now one of the big things for if you're in home construction or trying to have a project to your home, you're trying to build a shed, you're trying to expand your house, you're trying to do something. The first thing anyone will tell you who's a builder is the price of lumber, which has shot up recently, pulled in a little from the highs, decently off the highs, but still trading much higher than it was a year ago. Well, what nobody wants to talk to you about inflation is when you'll actually feel it because very few people are feeling it right now. Some people are making the gasoline argument. I'm not really following that. That's more political action, like shutting down a pipeline, releasing sanctions on Iran, and that dropped the price of oil, and then closing the pipeline raised the price of oil. I mean, those are more political actions. But when you get to more other raw materials outside of oil, you will realize that that is where the inflation is actually happening. And what we see here is we see, for inflation adjusted, an all time high in housing prices, which again, we've seen it drop massively, we've seen it raise massively. But what we're seeing is we're seeing inflation adjusted an all time high on houses. And the reason that happens is, again, I'm not going to go through all my data points here in one video, it would take me hours and hours. What actually happens is you'll notice that after we print a lot of money, there's more. See, I never even ordered this bare naked thing, and it's trying to sell me like granola right now. It's like we know Melnick is hungry running the Newsbeat show right now. Like we're gonna offer him granola. Like click here. It's tempting. It's tempting, but I'm gonna stay away from it. Let's see if I could like not see this ad. Nope, won't even let me click it. Anyway, point being is you're going to be feeling the effects of inflation. It usually happens. It usually happens not the same year, but like 2 years after the print date. So, for example, if we printed trillions of dollars in January 21, by January 23, you're going to feel at that point pretty much 100% of the inflation effects because what happens is it's a trickle down effect. And a lot of the money was given to the people on top. I don't need to remind you that the majority of the stimulus, I know what some of you want to say. You want to make the argument that, well, how about all the people, with who lost their jobs who are getting stimulus checks? And yes, that is billions and billions of dollars, but let's cut the bullshit. The biggest corporations in the world are getting the money. All right, we need infrastructure. What do you think that means? You think they're going to go to Tony and Sal's, auto body shop or Tony and Sal's cement paving LLC? No, they're going to the huge, huge, huge people, the Caterpillars, the Deers, the supply companies, and they're going to be dumping billions of dollars in their coffers. Now, what happens is when they have these billions of dollars, besides the fact that it trickles down, all right, people on top get it. They buy real estate, they buy gold, they buy stocks, they buy all these things. Then other people get it, then other people get it. What I'm saying is it's pretty much like the Christmas tree effect. And the star is on top, but what happens is it sort of starts coming down. It's almost like when you grow marijuana, what they like to do is they turn the plants upside down so all the THC just drips all the way down through the entire plant. I mean, I don't want to turn this into marijuana 102 over here, but a similar effect is going to be happening with inflation. And what happens is when you're dealing with this inflation is it's like the Christmas tree effect. What happens is you have like sort of this Christmas tree and, could you believe that the Julian School of Art never actually accepted me into their program? Like I would actually apply to something like that. I literally cannot draw a stick figure well. All right, so that's a tree, right? So pretty much this is why the market's never going to go down again. I'm trying to explain it as best as I can. So right over here you got pretty much you got the big dogs, the corporations on the top tier. And then it goes into the smaller companies and all on bottom here you got little whoa, that's pretty big font. All on bottom here is you have pretty much all the stimmy check people at this point. You got stimmy check people and it trickles down from the biggest corporation. We'll just call them Big Corp, from the biggest corporations, and it goes down in between all the way to the person who needs the stimulus check to survive. My point is this journey to the bottom, from top to bottom, the dollars come in the top first. The dollars is poured on the top of the tree. It's not poured in the ground and grown up. It's poured on the top of the tree and it comes down. This whole process takes about 2 years. But in the economy, it's the same exact thing. In order for all that big corporation, and I say stimmy check like it's going to individuals, we're talking about everything on bottom. Prices of homes, prices of milk, the full effects of inflation. This journey has, in my due diligence, been a 2-year ride. And you'll never be wrong if you follow that 2-year thing. It's right 100. It has been right in my due diligence 100% of the time. Future results aren't indicative of past performance. Say whatever bullshit you want. Maybe it doesn't happen this time. I think you're delusional if you don't think this happens this time. But hey, I respect your opinion to disagree. Make your own opinion. Don't believe what I'm saying. 2 years it's going to take for all this money to drip. Now, what happens is we've been doing the money we printed back in 2020. We're not going to feel that till 2022. So the money we're printing in whatever, March, February, March, April, whatever it was, whatever month it was, we're not going to feel that till 2022 from the money in 2020. The money we're printing now in 2021, we're not going to feel in 2023. So what happens is because we're not seeing now the Fed's job is to control inflation and employment. But what's happening now is inside the US, politics aside, certain states are completely opening up and certain states are no, you're sitting your ass home for the most part when it comes to job growth. As long as there is some restriction like that in the United States, we're going to have to keep printing those stimmy checks. And if we're printing stimmy checks, you're always going to have money for big corp. You're not going to be able to say we're going to do $1 trillion stimmy check program. Maybe it'll be a separate thing, but we're going to have 3 trillion for infrastructure, 4 trillion for this, 2 trillion for that. Well, there'll be other money being spread around is my point. Because if you give money to everybody, things can get easily accomplished. I mean, right now, there's people taking signs of McDonald's offering $18 an hour to flip burgers at McDonald's. You want to talk about all this minimum wage? Oh, $7.65, $10, $18, and they are putting signs up. Have your child. They want your children. Do you want? They literally there was a McDonald's saying, "Do you want your children to have a job? We're hiring here." And you know why they went after children? Because they're not actually receiving stimmy checks. And if you have a job, you're going to get less of a stimmy check. It doesn't pay for people to work in a lot of situations. Some situations it does. I'm not saying stimmy checks are a bad thing. I think they're a great thing. But I'm just saying there are holes to every system. And what's going to happen in the market, which nobody is talking about now, is we're going to feel the effects next year from the money we printed in 2020. We're going to feel the effects in 2023 from the money we're printing in 2021. And if you believe that this is not going to be an ongoing thing, I don't know. I disagree with you. I mean, ongoing for how long? I think we're going to be printing money for the next minimum 3 years, current administration, and maybe even the next 4 years for whoever is in the next administration. And again, I don't even think it's a bad thing. I don't want to pretend. I mean, I know there's a huge negative connotation behind inflation. I think it's the greatest thing in the world. I think we should keep printing money forever. I want everybody to have shitloads of money coming out of their nostrils. That's what I want. I'm a day trader. I'm a day trader. Newsbeat Live Room is the most consistent trading room on the planet right now. And again, 90 whatever percent of traders fail. We're talking real, confident, successful traders, right? Look, if I have to trade Tesla, which, if I'm looking sometimes for usually fractions of a percent, but just to give you a mathematical roundabout, Tesla had an $11 range on Friday. I killed it. Tesla this week traded like crap. I made so much money on Tesla this week. Shit tons. I might have had my best week that I can remember as a trader. Now, if Tesla was not at $600, but $1,600, let's say I'm looking to catch 1% of a move, which it's less, but just for mathematical sake, I'm going to explain it from a day trading perspective. Tesla's at 609.89. Let's say I'm looking to catch a $6 move in Tesla for a 1% move. You know what would happen if Tesla, I know it was pre-split, but post-split now went back to 1600, a what-if scenario? All of a sudden, my 1% move would be $16, not $6. And as a trader, I'll make a shitload more money. Yes, things will be more expensive. But from a day trader's perspective, your buying power will go further. You will be able to afford more things compared to the rate of inflation in the US economy. We are dealing literally with a golden age of trading. And some of you might be watching now who are struggling, who are not making the money, who do not have confidence in your abilities. I feel you. Again, to go back, this is like, you know why I show this? This is like 14 years of achievement of running trading rooms. So for me to show that, that's like almost like my badge of medal of achievement. That's the thing that I am most proud of. I worked 14 years to get a screenshot like that. 14 years. So believe me, I've been around the block a few times, I'm just Melnick from the block. My trading rooms suck. Now they're amazing a lot. Still know where I came from. Shit. But I'm telling you right now, in terms of where the market is now, where we're hyperinflating, I do not believe we will ever. I mean, look, if some deadly virus comes out and the market overreacts to the downside, I mean, it's going to be a huge buying opportunity. My point is not that we'll never go down again. My point is we're never going to be able to stay down again. You know the song like I get knocked down, but I get up again. You're never going to keep me down. That's like the market right now. That's the stock market right now. And yes, I think it's predictable. No, I'm not one of those people coming at all-time highs. Look at my video on May 12th, after the market closed down here, after the Qs looked like this, and people were like, oh, that's it. Market's done going up. We're correcting now. We're this. And I literally called the bottom of the entire market. Look at my video on May 12th. And again, I'm not always right. I'm not claiming to be always right. But this time I was. You're just never going to be able to, and I'm not saying, again, I know the market's going to move down. I know the market's going to move up. My point is BTFD by the freaking dip is going to be in perma effect forever. That's my point. When it comes to the market, not, some people might think, oh, well, maybe Melnick is talking about Dogecoin. I'm not. I do think a lot of these cryptos are going to come back. Don't get me wrong. Um, I can't speak about like an individual Dogecoin, but the market in general, this market in general here, we are going to come back. You are not going to be able to keep the market down. The market is experiencing the US version of the biggest hyperinflation ever. It's going to make World War II hyperinflation look like a joke. It's going to make the inflationary moves in World War II look like a complete hysterical joke. Because just keep in mind, our GDP right now, we're going to be unable, with everything we spend money on, to just even pay off the interest on what we owe. And there's only one solution to get rid of this. We either let it balloon infinitely, we either let the US debt balloon infinitely, or we just keep printing money. And if you're unfamiliar of what our debt looks like, I just want to remind you a little. Right over here, you see? This is what our US debt looks like every single second now. It's going up. Like it goes up pretty much $100,000 every couple seconds at this point. It's increasing. Now, if you don't know, a bunch of years ago, I did a video. I did a video talking about the US national debt, that if we broke 28 trillion, we're at the point of no return. We are literally at the point right now, ladies and gentlemen, of no return, in my mathematical opinion. It's an opinion. You can't come back from this. Every single citizen in the US, whether you were just born today, owes $85,000. Debt per taxpayer, if you're somebody who pays taxes, you owe $226,113. What are the odds that everybody in the US who works can pay $226,000? Zero. You know what? Every debt taxpayer couldn't pay 10% of that. They couldn't pay 26, they couldn't pay $22,000. How's that? Let alone 226,000. And again, just keep in mind this whole time, I'm not saying I have the best solution for this, and I'm somebody who is completely pro inflation. I call bullshit when I see it. The Fed was like, we're not afraid of inflation for years. I was putting out videos adamantly and strongly disagreeing with them. Now they're like, yeah, we sort of do see inflation. And I'm somebody who I think inflation gets a bad rep. I think inflation is one of the greatest things ever. You owe money, you have credit card bills, you owe money on a mortgage. I have good news for you. You're sitting there packing all your life savings in US dollars underneath your mattress or in a bank. I have bad news for you. There are going to be more people who benefit from hyperinflation than get destroyed. Now, you might be looking at some of the countries that have literally gone into depressions over hyperinflation. The problem is, if you want to start going into those Zimbabwe dollars, Zimbabwe doesn't produce shit compared to the US. Germany doesn't produce shit compared to the US. Venezuela doesn't produce shit compared to the US. You have these countries who are just so streamlined into one thing. Nobody gives a shit about oil. All of a sudden, it's all about green energy now. And with what's happening literally with the recent rise in the price of oil, that's actually bullish for Venezuela. We have no problem with food. People want our goods. People want our money. People want our debt. People want our cash. US dollars are a very sexy thing when you leave the United States of America. It still is, as long as it remains that way, which I don't see that changing anytime soon. And this is a real good one too. And watch this, ladies and gentlemen. Check this out. I want you to see something hiding right here. You see right there where it says U.S. federal debt to GDP. Because the Fed talks about the GDP. I said I said it, and again, I'm wrong on things too. I'm not pretending like, oh, I'm always right. No, I'm a human being. I'm not one of those gurus who only like to, show off when they're right, and I'm not showing off. I'm just talking real. Look at these numbers. GDP, US federal debt to GDP, meaning how much debt the Fed owns compared to our gross domestic product, our GDP, what we're actually able to produce, sell, whatever, etc., all entwined together, right? 52.78% in 1960. Then it dropped to 34.60%. You know what didn't happen between here? We weren't printing exorbitant amounts of money. Now, in 2000, it's back to 57.58%. Now, it's actually, this number is actually, it's much worse actually than this, but we'll just take what the number is saying, 128%. My argument, there's no going back significantly down from here. That's it. The US Fed is going to have to print money forever at this point. It's going to literally be impossible for them to solve this problem right here. Completely 100% impossible. And yeah, you'll never get $226,000 in the average taxpayer's hand. I don't think the average taxpayer can muster $22,000, which is 10%. Every citizen, you have a child born, each child owes $85,000 if you want to divide it among, U.S. citizens here. It's impossible. This number is going to go on forever. It's never going to be able to be solved unless some really crazy stuff happens. Like literally, if the Fed just said we're going to print $30 trillion and pay off all our debt at once, which would just everything would just you would literally see, in my opinion, you would see the S&P go to like 30,000 overnight. It would just it would just be the most obnoxious thing you have ever seen in your entire life. I don't think we're going to do that, but when you stop and think about it, which I have thought about it a lot, and I'd love your opinion. Share in the comment section. That's the only way we're ever going to be able to pay this off. If we just snap our fingers, print 28.4, currently it's going higher, $28.4 trillion, and then just say, here you go, other countries. They'll hate us. They won't trust us anymore. They won't want our US dollars as much anymore. But it would solve our debt overnight with the snap of the fingers. Stay optimistic. Stay confident. If you want to join T3 Live's #1 trading room, there's a link in the description. If you don't want to join and you just enjoy this video, God bless you. I hope you do well. Trading is something that can be one of the most greatest blessings upon somebody's life, I feel, if they're able to make it. And it can be one of the most stressful, trying things, depressing things that anybody has ever gone through if they're failing. I understand that. I respect that. That is why we run our service the way we do. But from the bottom of my heart, I hope everybody here succeeds. I love you all. We have a great week, great weeks, great months of trading ahead. We're going to be taking advantage of it. I hope you do too. Happy trading, make money. We'll see you guys next time on the Newsbeat live trading broadcast. Have a wonderful